I've been reading a lot over the weekend and hearing a lot of talk about Friday's event with the surprising British vote to exit the European Union or community, as hailing this as a black swan event. Now, of course, all the bears want this to be true, but I wouldn't go quite so far as to say this was a black swan event. No doubt it's going to be disruptive in the financial markets and probably for quite some time. But what I'm doing today is I'm looking at the markets, and I'll try to put a little different perspective on it. I'm preparing for my online webinars, which I hope to start right after the July 4th weekend, and I plan to do it after hours, after the market closes, for 2 or 3 days a week, rather than trying to cram it all in on Saturdays, just because I think it'll be easier to digest an hour at a time rather than 3 to 6 hours at a time. It's just too much to ask for me to talk for that long, and also for the attention span of the viewers. So let's take a look at the markets here, and I'm going to, of course, go where I always go, and that's down to my W&B user groups. Now, I'm preparing a folder here, which is going to be used for the webinar. What I'm doing is I'm grabbing views, filters, and combos that I've been using for years, and I am putting them in a folder. It's called my webinar series material. I'm still putting this together. I'm just trying to make it as efficient as possible. But let's go through this, and I'm just going to use these files for now. You're familiar with most of them. If there are some in here that you haven't seen, that's fine. Okay, so what I do is I go into my Major Markets Plus. That's where I begin, at the top of the W&B user groups, and these are my major markets, or the major markets with some ETFs added in. Now, the reason I did this years ago is to give us a broader perspective on what's happening, and the best way to do that was to use the major market indexes and intersperse, or add, I should say, some ETFs, which will give me a feel for what's going on. So you can see that sorting on the percentage price change one day, that the volatility index of VIX closed up nearly 50% for the day, and at 92.9% of its daily range. This was followed by the gold miners, but notice that this only closed at 25.37%. So there was heavy early buying, and then gold pulled back. Here it is right here, 55%. So there was more than likely a short squeeze at the beginning, and then a pullback as the day went along. Bonds, as represented by the TLTI shares, only closed at 36.64% of their daily range, even though the percentage price change was huge. By looking at these daily ranges, we can instantly get a feel for how much power, or how much, I should say, buying power or sustainability there is going into the close. And the VIX stayed near its high, but the rest of these did not. Let's just take a look at the TLT. For example, you can see that it gapped open, and I'll zoom in to number 1 here, or alternate 1 allows me to zoom in. You can see that it opened at its high, traded down, and then closed, 36.64%, somewhere in the middle. So a lot of uncertainty there, but it did not close near its high. So some of the fear came out as the day progressed, and there was some profit taking. Now let's look at the gold miners. You can see very similar situation. In fact, there are bearish VPA flags on this. Even though the VPOC 1010 turned positive, it opened here and closed down near its low. Now let's take a look at the VIX. Let's put this in perspective. I'll do a weekly, and I'll zoom in, and you can see that back in August of 2015 that the VIX was much higher than it is today, and as recently as December of 12-15, 6 months ago, it was higher. So even with this so-called black swan that I'm seeing bantered around, the VIX is much lower than it's been in the past. In the recent past, I should say. So let's see what really got hit hard. Well, I know banks did. I don't have a banking ETF in here, but we'll get to that. You can see that the SOX, which was very strong the day before, was down 5.8%. In fact, I want to show you something that I've never seen before. And I'm going to go up to my NASDAQ chart. Actually, I'm going to go down to the next one. Let's take a look at this one first, though. Where we are here, this is where the NASDAQ Composite stood back in mid-May. That was May 19th. And we're just about at that level again. So, yes, it was a massively negative day with a huge volume spike. But we have not broken this support yet. Now, all of these indicators, they're all negative, of course, and the volume was up tremendously. If you look over here, you'll see that compared to the 20, the 50, and the 90-day. And the internals, if I hit my alternate I key, the internals pop up here, and you can see that there still managed to be 711. No, I'm on the wrong day. I'm sorry about that. Okay, I didn't think that was right. Okay, advancing stocks 355, declining stocks 2118. So there were some advancing stocks, but overwhelmingly negative. It was nearly a 6-to-1 down day. It wasn't a 10-to-1 day, and you know, during these black swan events, 10-to-1 is not uncommon, but very negative. But let's go down to this the chart that Ian put. I went one too far together many years ago, and this is something I have never seen. On Thursday, we had a strong Eureka and a Kahuna. And then the next day we had a Phoenix and a big Kahuna to the downside. So that's just something I've never seen. You can see that this is all oversold. Everything was green on Thursday, and it's all red on Friday. So it's just a very, very unusual occurrence, and we know it's a major news event when something like this happens. I'm going to go to just a different chart here. Here are the forcing indexes. Were very positive. The VPA flag was an effort to rise, a very bullish candle. But look at the volume. This is something I noticed on Thursday. With that big move up, look at the volume was less than normal. And then we have this huge volume day on Friday. Once again, support is right here based off of this, and then longer term support would be below this. Here is the volume comparison. The long-term trend is still long based upon that 40 day of the 5-day moving average. The slope is still up slightly based upon that, but if we have another really negative day on Monday, I'm sure that's going to change. Okay, let's look at a few more things here. The SOX, like I said, look at this. It was breaking out to a short-term high. There's no volume on this. This is why I don't have any other indicators. But let's do a weekly on this. And here's the way the week ended. But on Thursday, it was at this point. So if I put a crosshair on here, You can see that this goes back to July of last year. But it certainly looked like it was on its way with the expected Remain votes. Well, the Remain votes in Britain were expected to prevail, and this is what happens when you trade the news. I mean, you know, you can look great, but the next day you can get totally hammered. Okay, so let's just move down quickly. I don't want to spend too much time on this. Here's the financial sector right here. That's what I was looking for. You can see that it was down 5.4%. Once again, look how it had gapped up on Thursday, and it looked like it was going higher, maybe up to challenge the old high, but look at it on Friday. A total reversal. Let's take a look at that semiconductor, the SMH, total reversal from the day before. A huge gap down. Traders who bought here on the close were feeling pretty darn good about their positions going into Friday, and what a surprise to wake up to this kind of a loss the next day. It closed down minus 5.84. Had you sold at the open, you still would have been down substantially for the. Now things aren't looking real good, are they? So let's go on down. I'm just going to go down to my broad market indices. Let's look at the number 2 view that I have in here. I want to show you the advancers versus decliners. If you look down this column right here, you'll see that the top 100 stock holdings in the indexes, these are the top 100 stocks in the NASDAQ 100, the S&P 1500, the S&P 500, and so on. These are the institutional stocks that are traded heavily. 97 decliners, 3 advancers. Look at the all stocks institutional. 1,866 decliners, 140 advancers. Small caps, 836 to 44. Huge negatives. The defensive stocks held up best, if you can call this holding up. 3 advancers to 23 decliners. Now let's go into all securities. I'm going to right mouse click. I'm going to change to the group. I'm going to move down my list here. These are the stocks up in wolf packs one day. You can see that there are 72 in all securities. In other words, the group had to be up and the stock had to be up. If I sort on this, bring up my spectrum analyzer, drop down to the industry, you can see which stocks qualified. Precious metal and mining, integrated utilities, and there were 3 sporting goods stores. I don't quite understand that, but that's the way it is. And on the downside, you can see that there were 2,943. These are stocks in groups. They're assigned to groups dominated by the banks, the biotech, specialty pharma, REITs, application software. So it looks very bleak at this point. Now, going down to the next one, these are bullish VPA signals today. A lot of these signals can just be like stopping volume. You can see that. Tests for supplies and so on. REITs dominate the list. There are some specialty pharma stocks and some banks. What is being generated here are different oversold VPA signals. In fact, I can go into here. There's going to be a new search function, or I've got a beta version of the program, but there's a search function now, and I'm going to go to a VPA signal condition, and this tells us what the VPA signal conditions are, and you can see that it's dominated by stopping volume, and then stopping volume, transfer of ownership, tests for supply. These are the 3 main ones, but stopping volume is the primary VPA signal that's being generated. Now let's go to the bearish VPA signs and look at this. There are 932 of these. How many positive? Only 411. And look at this effort to fall. A major sell signal, 88.84% or 828. Pseudo up thrust, in other words, it traded up and then fell back. And then here's a combination of the two. This is what dominates the downside groups. It's all looking pretty bleak at this point, but let's go to the next one. This is my perfect speculator filter, which you have in the VPAs, and let's that doesn't seem right. Oh, I see, that's VPA signal condition. I forgot that I need to go back down to the industry. So here we go. These are stocks that are either trading at all-time highs or at least 3.5-year highs, somewhere in that neighborhood. And look where the money's flowing. No surprise here. Integrated utilities, REITs, precious metals and money. Utility networks, household products, only one household products, but you know these are defensive, all of them, and that's what the perfect speculator screen is showing. You can see that they're sorted here on industry group, and this is where money is flowing. Here's Clorox, household product. Let's take a look at it. You can see that it had a good day. Money is looking for a place to hide. Now if we look at this, actually the ERG is pretty good on this, and it's yielding 2.3%. You can see the gap down, but you can also see that buyers stepped up and jumped into this stock. So in a true black swan, I would think we would be seeing even worse numbers to the downside. I mean, the numbers are bad enough, no question about it. But there was some money flowing into a few stocks. Now, I don't want to go through the rest of these. I don't want this video to get that long. I'll just save that for the webinars. But I do want to, this is something that I put together Friday during the market meltdown, and these are all fields that are in HGSI that Matt put in some time ago. I just hadn't gotten around to do anything with them. But as ugly as the day was, I am going to go through a couple of these just to show you that there was buying going on. It wasn't all selling on Friday. You can see that I have titled this Intraday Stocks Off of Intraday Low. The long-term trend is up. What I observed on Friday is what you've seen already in some of these charts, is that even though everything was down, and by the way, the stocks that everybody follows, the Googles, the Apples, Tesla, stocks like that, I mean, they got hammered, most of them. Amazon held up pretty well, but there are a lot of stocks in the universe that money flowed into, and if they didn't close positive, and you can see that a lot of them did not close positive, this line right here, the percent change since the last open, shows that a lot of these stocks went up from their opening price. And let's just take a look. I'm not familiar with this stock, a Bravo Brio Restaurant. It's a little $8 stock, but look at this. Pocket pivot. The open is here. It closed near its high. This is a loose chart. I don't know anything about this stock. But, you know, their revenues are pretty decent. They've got positive earnings. It was down a little bit this quarter, but evidently the people feel, or some people feel, that this is worth getting into. Now here's another stock, TDOC, Healthcare Services, gapped lower, closed at or near its high. Right here you can see the intraday range, 98.72%. Look at Casey's General Store. Huge gap down. Buyers came into it immediately. A pocket pivot happened. Both force indexes are positive. That is a big move up 6.3% from its intraday low. Now meet me, this is one that I mentioned the other day in my morning report. I said it is not a buy, but it's one that should be watched. And look at this. It gap clear down here and closed at 93.88% of its range, daily range, and there was a pocket pivot on that too. Both force indexes are positive. The 13's been positive, along with the VPOC 1010 from clear back here. And that is a stock that looks like it wants to go up. Let's look at these percentage numbers here on growth. Now there's also speculation that this may be a buyout. I hope what you're seeing here is that even though a lot of stocks really got hammered, there was buying in several other stocks. Now Ryanair is, I don't know what happened here, but it traded down to 71 and it closed all the way up at 77.61 at 95.96% of its daily range, up almost 8% from the low. Now, like I said, this is a view and combo and filter that I put together on Friday. I was looking for some bright spots in the market, and this is the best way that I've come up with to do it. I'll be introducing this in the webinars, but it just gives a different perspective. You can see that 873 stocks passed this filter. In other words, they were up during the day. Let's see, what I did here is I put a minimum of 30% on the intraday range, so they had to be up 30% from their low, but that's a pretty high number of stocks that traded up after getting hit hard early in the day. Now let's take a look at the industry, see if we can get any information out of this. And guess what? The REITs were among the biggest group, and specialty pharma and biotech. I mean, they absolutely got hammered, but there were people in buying these groups. Let's do a sort here on the REITs. I'm going to do a sort, and then going to do a secondary sort. Notice that you're getting search fields in here. I'll just type in intraday, and then what I'm looking for are is the percentage change last divided by the open. And if I go down to the REITs, shouldn't have scrolled up here, but I'll get down there quickly. But you can see that there are several groups in here where these stocks traded well off their lows, and at least 30% of their daily range. Okay, here are the REITs. So I did a primary sort on the group, and then I did a sort on the intraday change divided by the last open. Next Point Residential Trust was up 7.81% from its low. And look at this. I mean, breaking out. Yes, it's conservative investment, but these REITs have been tremendous for a long time. Look at the yield here, 4.6%. Look at the the per share growth percentage-wise is excellent, and this stock obviously has been in an uptrend. Pocket pivot here, pocket pivot here. There were pocket pivots here. There was a negative pocket pivot on one day here. You can see the little spike there, but it's stayed above the VPOC 1010 this whole time. Let's look at one more, and then I'm going to end this. Let's go to a different group. Let's go to that specialty pharma group. And this stock, wow, BioStar Pharmaceutical up 33.44%. That's a little cheap stock, and it was a lot higher. But look at this. There are buyers coming in here. Get rid of this crosser. Took it all the way up to here. There must be news on this. A little too volatile for me. No earnings numbers here and so on. But something is going on with this stock. Let's look at one more. Maybe we can find a little better chart here. This is a $4 stock. Once again, it's been moving up. Had several pocket pivots. Look at the groups moving down. It's moving up. Gap down to here. And closed near its high of the day. The thing that I think is valuable about this screen is that intraday it's going to give the ability to find stocks that gap down in the morning and then start trading higher throughout the day and maybe give us an opportunity to get into some of the stocks. I've only done the long side. I'm sure that I'll do it for the short side too, those that gap open and then trade down. Anyway, I just want to put this out there for you to show you that everything is not negative. If you look at the major indexes and the groups, which I didn't get to the industry groups, everything looks extremely negative there. But there are always some positives, or I shouldn't say always. I remember a few days when I didn't see much positive back in '08 and '09. But I'm certainly not willing to classify this yet as a black swan event. We'll see what happens tomorrow and the rest of this weekend going forward. Have a good rest of the weekend, and we have July 4th weekend coming up next week, so normally trade would start slowing down as we approach the weekend, but there's so much fear out there, I don't know. We may see a lot of activity this week.